Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the Kickstart video. On the Kickstart video, I take a look at three of the major currency pairs: Euro versus US dollar, dollar versus yen, sterling versus US dollar. Today is November 5th. It is the US election day, and that means there is likely to be lots of volatility because it's a toss-up, folks. It's a toss-up, and we won't know the results until later on today, this evening, tonight, tomorrow, maybe 2 weeks down the road. So we have to be prepared for anything. And to do that, we do like to keep the process of looking at the technicals that are in play. Those technical process is consistent, and consistency brings about different ideas as far as the bias goes, as far as the risks go, as far as targets go. And I'm going to go through that in this video, so let's get started. All right, the process that I've been focused on lately has incorporated this red box. This red box at the ceiling area has the 200-day moving average. I covered it over with the red box, but you see this green line right here. It actually goes sideways right along that line right there. And you can see over here that 200-day moving average comes in at 1.08692. So, and lo and behold, the low price that we saw late yesterday, early today in the Asian session bottomed right against that 200-day moving average. So guess what? Support held and kept ourselves outside of the red box, keeping the buyers in play. But there's work to do on the top side, and that work to do on the top side incorporated this swing area right through here, which incorporates a number of different swing lows and highs going back in time, including these levels that I'm outlining right through here, 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 and here before we move to the upside. Came back down toward that swing area in trading 4 or so weeks ago, and then traded above and below it here before finding resistance here and moving lower. We will return back to that area in trading last Friday. As a matter of fact, the U.S. and jobs report sent the price up to the 50% retracement and also in the middle of this swing area right here, and found willing sellers push the price back within the red box. And then in trading this week, we gapped higher, went up to the high of the swing area here, and again today here, and found willing sellers to push it down to the 200-day moving average. And here we are trading back up toward that swing area, toward the 50% retracement, looking for a break to the upside. If we do break to the upside, guess where we're going? We're going up to this 100-day moving average. That would be the next key target. Then we look toward the 200-bar moving average on the 4-hour chart. Those levels come in at 1.0940, 1.09564. If we break above them, it opens a door for further upside momentum in the currency pair, with probably this area as the next key target area, right around the 110 level, up to 110.14 level. So a nice natural level of resistance at the low of the extreme, but also extending up to the 14 level. And if we get above that level, then it opens a door into this higher region right here, where we moved higher, we moved lower, we moved higher, we moved lower, and then broke below that level. So I guess I could put a red box around this area as well, and say that we would move back within that area on the top side. That would be a lower dollar scenario. Now a higher dollar scenario would have the price moving back within the red box through here. And if we move back within that red box, we're going to look down toward the 100-bar moving average on the 4-hour chart. That's the blue line in this chart. Look down toward the 61.8% retracement. That's this line right here, which happened to be a low price that we saw near Friday's trade. And then we open the door for further selling with this swing area down here, probably in the next, and the low of the red box as the next key target on the downside. The level corresponds with different levels going back in time through here, 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 and here before moving to the upside. So you can see the importance of this level, and it goes back further over here. There's other levels that it came in play within that same area. It wasn't until 2 weeks ago that the price came into that area, and then last week it did the same thing again. So breaking below, back into the red box, below the 100, below the 61.8, opens the door for a move back door to the low of the red box. And if we get below that level, then we look toward this triple bottom through here. So those are the levels. That's the process for traders. Obviously, the buyers are more in control here outside of the red box, but there's work to do to get above the swing area right through here to increase the bullish bias and get above other levels on the top side, including the 100-day moving average. So next, let's take a look at the dollar versus yen, and sort of plan our day by following the process. And in this process for the dollar versus yen, we have this area right through here acting as ups and downs of a range. Yes, we did move below it here. And what do? Actually, we went down and tested the 200-day moving average. I don't mean to have that. I mean to have this 200-day moving average right here and moved to the upside. In trading yesterday, we came down to the 200-day moving average and once again found support buyers against that level. So really, I should probably incorporate. I should probably use the floor area of this ups and down range as being the 200-day moving average. That would make more sense, wouldn't it? Yes. So also moving up toward that 200-day moving average is 100-bar moving average on the 4-hour chart. In a few hours, it's going to be right on top of that level. So that's going to add to the importance of this level right here, as if it wasn't important already, having found support against it in 2 weeks ago and found support against it in trading this week as well. So on a more selling of the U.S. dollar, the breaking below the 200, 100-bar moving average would have traders looking toward the 50% retracement. That's of the move down. If I go back in time all the way back to this high right here, going back to July of 2024 to the low price that we saw in September, 50% retracement comes in at 150.757, and below that level, we have the key 100-day moving average. That's this level right through here. Both these levels are key levels on the downside, and so is this right here. 200-day moving average, 100-bar moving average, 50% retracement, 100-day moving average. All those levels would need to be broken to increase the bearish bias, and if they are broken, then it would open the door for further selling pressure in the dollar versus yen. Now, on the top side, we of course have our high prices here at 150. Or this high swing area between 153.59 and 153.88. And if I were to spread it out even further and go back in time and take a look at these highs up here at 153.88, those highs also correspond with this high right here. So we had 1, 2, 3 separate highs. The last 3 highs that we saw in the dollar versus yen have come in right at that 153.88 level. So is that level important going forward? You bet it is. So get above the 153.88 level, open up to the door for another swing area at up to 154.88. And then we break above that level, and it opens the door for further upside in the dollar versus yen. So levels are in play for this pair, with the daily moving averages in play on the downside, and the 154.88 level probably is a key level for to get to and through on the top side to increase the bullish bias for this currency pair. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the 4-hour chart for this currency pair. And what I like about the low price that we saw in trading last week was that the low price stalled right near this swing area through here, defined by these different swing lows and swing highs. Got a little wonky here, but we did find a ceiling through here before moving to the downside. Came back up to that ceiling here, moved a little bit lower, tested support against the moving average, and then came up to a level and then broke through the level right here, moving to the highs through here. It wasn't until last week that the price came down to the low of that swing area, just below the 50% retracement of the move up from the April low to the high price that we saw in September. And we saw the rotation up back toward the key 130 level. Also the falling 100-bar moving average on the 4-hour chart. Also the 100-day moving averages in play through here as well. So all these moving averages came into play here, and we fell back off. Where do we go? Toward the 129.38 level. And that level is important. Why? Because you go back to this low right here and these highs right here, and then go back to this low right through here, and then move down to up more to this level right through here and here and here and here. All these levels through here found either support or resistance against that 38 level, and lo and behold, in trading yesterday we did as well, moving just a little bit below that level. So guess what? On the downside, we need to get below the 38 level. If we do get below that level, we'll look toward this swing area down here. Once again, if we break below that level, look for the 200-day moving average, and so on and so forth down to the downside. On the top side, which we are now above these 2 moving averages, also trading just above the 130 level. The next key target comes against this swing level over here, and then we start to look toward the 200-bar moving average on the 4-hour chart, and this swing area in between the 131.12, 131.447, defined by a number of different swing lows and swing highs going back in time through here, here, and here before the market moved to the downside. So the process for this currency pair is, we have our levels in play using our key technical levels, and that's what we're going to have to focus on through all the volatility that we're going to see in trading here today as a result of this U.S. election. So my advice to you is understand prepare, be aware, understand your process, and understand where the key levels are, so that you can define your risk, limit your risk, and also target your trades if they do go your way as in your trading here today. So with that said, my name is Greg Michalowski. Good fortune with your trading. Bye-bye now.